Illicit financial flows are of concern to African countries because of their negative impact on development and governance. As the Mbeki panel on illicit financial flows from Africa established, the processes through which illicit financial flows take place undermine governance because their intent is to escape the obligations of citizenship, abuse public trust, and to break the law. Of equal importance is the fact that resources lost to illicit financial flows could otherwise have been used to drive Africa's development. Lost tax revenues and private investment could have helped to avoid austerity, provide jobs and infrastructure, and pay for vital social services, including education and health.
That was Dr. Yemi Dikbeolu, Special Advisor to the President on Economic Matters, speaking on behalf of the Vice President, Professor Yemi Oshibajo, at the opening ceremony of the Second International Conference on Combating Illicit Financial Flows and Enhancing Asset Recovery for Sustainable Development, held in Abuja from the 11th to the 12th of September 2018.
Today on Tax Matters, we'll be discussing illicit financial flows and the various manifestations. Welcome to Tax Matters. I am Chiamaka Ohaochi.
And I am Pearl Naimaka. What, you may ask, is IFF? Several sessions were held at the two-day conference at which experts and resource persons on the subject matter exchanged ideas and preferred solutions on the way forward.
I have a small illustration for this to bring the reality of IFF, how it destroys economies of developing countries. If we take, for example, issue of trade mispricing, that is either over-invoicing or under-invoicing, what does it do to us? Particularly our local companies and entities. One of the things it does is that it increases the cost of operation of such entities, thereby rendering a supposedly viable, profitable venture to become a loss-making. Now, if this happens, what are the implications? One is that it reduces the profits that are available for distribution to the shareholders. And so the shareholders, the local shareholders, are shortchanged. And the foreign shareholders or those who are involved in the IFF are profiting. And this, again, has the added effect of prolonging the payback period of investment, has the added effect of making the investing climate to become toxic. People are no longer willing to invest in such economies because they see it as not being profitable. It also leads to increased cost of borrowing in that economy. Now, another effect is that there is plundering of assets of the local entities when people engage in illicit financial fraud practices. And how does this happen? Where an entity's cost is pushed up unnecessarily, actually assets, cash, is being taken out of that entity. So that entity is being stripped of its assets. Now, God help that economy if that local company has not borrowed money. If it has gone to a bank to borrow money, and the asset has been stripped by way of, in one way or the other, illicit means, the entity will not be able to service the loan goes bad, and if there are too many of them in that same economy, the bank go bust. If the bank goes bust, people lose their life savings that they have deposited in the banks, again further destroying the credibility of the financial system of that economy. So when we look at illicit financial flow from the trade perspective, you will see that it does a lot of damage to the local economy. And then finally, let me speak about the tax issues that are involved in IFF. And that has to do with double losses that the local economy suffers when IFF through tax evasion or abusive tax avoidance happens. Nigeria already has a transfer pricing unit. And so if there is a transfer pricing audit and an entity had engaged in tax evasion or tax avoidance, and the tax authority has come to make adjustment, it is double loss for the entity. Because in the first instance, the money had moved out illegally. Now, when additional taxes are come, it is still the local entity that goes on paying. The mother country that has moved out the money by way of tax evasion or tax avoidance had gone away. And so the local players in that entity have come to bear double loss.
Now, when we break down IFF and distill it into their components, it's very clear that the elephant in the room is international trade, or what we call transnational trade, cross-border trade. And this is engaged in by multinational enterprises as well as local conglomerates. And we in FRS, we focus on that as well too, because we have companies in Nigeria who will float other companies. One of them will have a pioneer status, and because of that, is not paying tax for that period. What do? They ensure that they shift profits to the one that is not liable to pay taxes and make less profit for the one that are paying taxes. So locally, we have shifting of taxes to areas that they will not pay to government.
I'll start with a story. In Tanzania, a UK incorporated company that has its parent company in Canada, but has 3 mining businesses in Tanzania, even though it has other companies elsewhere, but they didn't get involved in any business, declared losses for 3 years. In those same 3 years, this same mining company, African Barry Gold PLC, it's a reported case, so I can name the company, transferred dividend to its shareholders. Now, again, recall that all its businesses are in Tanzania. All 3 mining assets declared losses. However, the UK company shares dividend to its shareholders, the Canadian company and other companies. And when they brought this case before the tribunal, the company said that it declared its dividend from distributable reserves created after reduction of the appellant's capital and IPO process. Now, those of us in accounting and law know that you only declare dividend from what? From your profit, not from your IPO and not from your capital. And the judge actually held that the transactions were simply a design created by the appellant aimed at tax evasion.
One of the things that we noticed as after the high-level panel report came out on illicit financial flows, that's already been mentioned, that corruption, although it has been slid out as not being as much as corporate transactions, unfortunately it actually peppers the entire process. So if you're in private sector and your commercial transactions are going through transfer pricing or any kind of illicit financial flows, then very often the system that is in place is actually utilizing corruption in some part of the process. So what do you start to see? You start to see a situation where commercial transactions are mixing up with corrupt transactions, but whereas there is some kind of responsibility taking place in the foreign country outside the African continent, we within the African continent have not actually been holding people to account. So there's one step is to actually get the money back, but the second step is also to make sure that the people who were part of that process are held responsible.
And talking about holding persons accountable,
the various facilitators and intermediaries can be categorized into 2. Financial institutions and other institutions, and then the category of professionals, the lawyers, the accountants, etc., etc. How do we hold them responsible? We can hold them responsible, and we have a lot of mechanisms for that. The most important is the global standards set up by the FATF, the Financial Action Task Force. The 40 recommendations of the Financial Action Task Force have comprehensive provisions to hold all these facilitators responsible. It is so comprehensive, but in terms of determining what are the predicate offenses and in terms of determining who should be responsible as well as in terms of imposing sanctions. And all these have been translated into our legal systems. And that is why, for any country now that I know, at the minimum, they have a money laundering legislation, which specifies the offenses, who should be responsible for reporting, and all these professionals are.
Let me speak briefly about facilitators and intermediaries. Of course, the direct facilitators will be the accountants, will be the lawyers, the bankers, the brokers, and all of that. And I do agree that there has to be consequences for intermediaries who do not do the right thing, both legally speaking and from what is acceptable customarily. Now, having said that, it is the role of government to ensure that those consequences are administered. I also think that professional bodies need to play their role, from MBA to ICANN and CI10, and the list goes on. We all have to play a role in all of this. But beyond those direct facilitators, I'd like to quickly talk about the indirect facilitators. Now, these are the enabling factors. I call them the people who facilitate the facilitators. Maybe they are not human beings, and they will be the bad laws that we have. It will be the weak institutions that we have. It will be our value system that we have destroyed. We celebrate wealth that we can't explain. No one can explain it, but we celebrate it in any case. Sometimes you get the front row seat even in churches and mosques. You get chieftaincy titles, and you become the role model. Yes, we need to leverage global initiatives. I'm happy to say that for the accountants, maybe they're a little bit ahead of the lawyers. So the International Ethics Standard Board for Accountants issued a regulation last year that's called Non-Compliance with Laws and Regulation, NOCLA. And that regulation overrides the duty of confidentiality. And it now requires that accountants must go and report when their clients get involved in illegalities. I'm hoping that Nigeria would enact it into a law locally so that it becomes binding on all of us, rather than just a directive from our professional bodies.
When you are talking of illicit flow of wealth from Africa, we have to take up the battle ourselves. There is no way Western countries that are benefiting from the criminality will help us. We have to do it ourselves. We must not be on the defensive when you are discussing illicit flow of our wealth. Don't be on the defensive. It takes two to tango. We must join issues with Transparency International all the time, and not the funny agencies that point accusing fingers at us. It takes two to tango. And I think President Buhari made the point in the United Kingdom when Prime Minister Cameron said Nigeria is fantastically corrupt. And the president was asked, an old man, mature, said, no, I'm not going to join issues. I'm not demanding apology. But I'm simply asking the Prime Minister, please, return our looted wealth in your country.
A lot was also said about improving international cooperation and information exchange.
Clearly, we cannot solve this problem alone all by ourselves. We cannot. We need cooperation among ourselves as Africans. We need cooperation internationally. Because this financial fraud that takes place is done by various means. Misstatements of their invoices, over or under, depending on the one that suits them. They misstate their trade transaction, over or under, depending on the one that suits them. We have transfer pricing, or what some people call appropriately transfer mispricing, actually. And this is done sometimes with the connivance of the developed world. Those countries that provide tax havens, where we have anonymous companies, shell companies, companies that offer products like trust that enable these companies to engage in unethical practices. And that goes on. And sometimes, when eventually we catch up with them, to get this money back becomes a problem. We are given a kind of terms and manners by which we are going to get them back. Having said that, it's not as if the international community has turned a total blind eye. In 2013, the G8 met in Lo NE, and they came up with a 10-point declaration. Clearly, one of the things they said in that declaration is that every country must assist to make sure that law that allow companies to engage in unethical practices are removed from their law books, and that every country must cooperate to ensure that this is achieved. The revenue authorities must cooperate, and we're doing that strongly in Nigeria, with the company registry. In Nigeria, we call it the Corporate Affairs Commission. The land registry, we're working closely with them. We must work with Security and Exchange Commission, the capital markets regulators. We must work with the Financial Intelligence Unit. These are people where we can share information and get information about some of these companies that we deal with, rather than work in silos. At the global level, in Nigeria, we sign off to the Multilateral Competent Authority Agreement for the automatic exchange of information. We are hoping that by September 2019, we are going to be a member of this forum. And what that means is that we are going to get information automatically when we become a member. We are also a member of the Global Transparency Forum on Exchange of Information. These allow you to have access to country-by-country reporting, for instance, whereby companies that operate in your country, and they have a global turnover of 750 million euro and above, they must provide a country-by-country reporting. That allows us to distill the financial statement, to know what operation was conducted in your country, what taxes were paid, and you can do what was paid by all other countries and see whether it makes sense to us. So, except we belong to these global bodies, we are going to be shut out of the global tax agenda.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams, FEAT, on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate TCC. Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
At the opening ceremony on day one, Professor Femi Odekunle gave a background to the conference.
IFF creates a problem for developing countries, particularly African countries. According to the figures available, the scale is such that we lose a minimum, conservatively, of about $50 billion annually.
Representatives of conference organizers mounted the stage to give their perspectives on illicit financial flows.
As a tax administrator, I simply believe that if any income, profits, is not adequately taxed in the area where it's generated, it is no longer tax planning, it is corruption. I believe the issue of corruption, people look at it where some individual or some corporate organization basically goes around and steals money. I think corruption also applies to taxes and non-payment of taxes where those taxes are due. And like the prof before me had said, I think in trying to ensure world stability and safety, countries should be concerned when certain funds are invested without checking on the tax status of where those funds came from,
Evidence shows that enormous resources siphoned from Africa have stifled provision of basic infrastructure, quality education, and health services, amongst many, many others. Of course, another challenge that we see, and I see that on a daily basis in the Ministry of Foreign Affairs, is asset recovery. It's mind-boggling, the difficulties of restitution and recovering assets from foreign countries. And notwithstanding the fact that at the level of the United Nations, at the global level, there's been a resolution that has been passed, issues of illicit financial flows, and demands on countries to facilitate asset recovery. But we know that it is still a real challenge, especially for developing countries. Some of the big muscular countries like the United States, of course, are able to put pressure on countries, and we saw that, the pressure that was put on Switzerland, which was known for its banking secrecy. We saw that when some of the bigger countries like the United States, Germany, and France were having very serious issues about their citizens who were transferring large sums of money into Switzerland and protected by this banking secrecy. And these big countries went after Switzerland in a very big way. Huge sanctions against major Swiss banks. And in no time at all, the Swiss buckled and changed their laws. But for developing countries like ourselves, it's so much more difficult. We got some money back from Switzerland, but my God, when you look at the details, I was shocked and extremely angry at the process of recovery, because you see the percentage of the money that was paid out to all kinds of institutions in Switzerland, to lawyers, to this, to that, percentages of huge sums of money. And I said, but this is daylight robbery.
The antics of multinational corporations came into focus in the keynote address presented by Dr. Abdallah Hamdok of the United Nations Economic Commission for Africa.
I think here I would like to emphasize the main culprit in this is linked to commercial activities of some of the multinationals. Don't get me wrong, we would like to see good, honest companies, multinationals, to come to this continent, invest with us, work together with us to develop our continent, but pay their dues and pay their taxes.
Special guest of honor at the occasion was the Nigeria's Vice President, Professor Yemi Osinbajo, who was represented by Dr. Yemi Dikbeolu, Special Advisor to the President on Economic Matters.
I repeat the call I made last year that illicit financial flows should attract the same level of global outrage that the world has for drug trafficking, human trafficking, and terrorist financing.
We are coasting home, but before we go, these parting shots.
Last week, the heads of 52 African states were in Beijing to meet with the Chinese government to beg for loans. And the Chinese government generously promised to make available to us $60 billion for infrastructural development in the next 3 years. But if we agree this morning, I mean, even with the most conservative figure, that about $50 billion, the most conservative, leaves Africa per annum. In those 3 years, $150 billion will have left us. So this is why we must address how to arrest illicit this flow.
As a matter of fact, it's been contended that Africa, we are a net exporter of capital at the end of the day. When you look at what we are losing by way of IFF, and you compare it at the aids and donations that we're getting from this developed world, at the end of the day, we're a net exporter of capital.
For Africa to be free of the debt trap and the perpetual dependence on aid, we must keep what belongs to us at home.
As we look forward to the implementation of the resolutions of this second conference and to the holding of the third one, we counsel all relevant governmental organizations to be vigilant. See you next week.
Have a beautiful week ahead.